The escalating trade battle between the U.S. and China is rocking investors around the world. Market futures predict a rebound on Wall Street today after the worst day of the year for stocks. Major indices lost around 3% or more yesterday. The Treasury Department is now labeling China a currency manipulator. This means the U.S. is officially accusing Beijing of devaluing its money to gain an unfair competitive advantage in international trade. CBS News business analyst Jill Schlesinger shows what this worsening dispute means for your money. Good morning, Jill.
Good morning.
So what is the fallout of this escalating trade war for the economy?
Well, forgetting about the markets for a second, we know that the overall U.S. economy was already slowing down. Manufacturing activity at a 3-year low. Just yesterday, we got some information out of the service sector, starting to feel the pinch as well. You add this on top of it, and now we have to say, what are the Trump tariffs targeting? They are targeting consumer goods that we use every day.
We're looking at an alarming drop in exports right there,
yeah,
17%.
Yeah, so we have imports are down, of course, but also exports, so that hurts manufacturing. But if you look at this next round of tariffs that was announced last week to go into effect on September 1st, laptops, cell phones, toys, clothing, all these things could rise in price because those tariffs might get passed along to consumers. Right now, consumers are doing really pretty well. If these prices start to inch up, will they spend as freely? The big concern among economists is that they don't, and that would slow down growth even more in the second half of this year.
The idea of China being a currency manipulator, for people that don't understand exactly what that means, what is that?
They're bad. That's what it means.
In a word,
it is symbolic more than anything else. There used to be a way that you could go to the IMF and do something about this, but this is a largely symbolic label. It is important to note that we haven't labeled China a currency manipulator since the 90s, so 25 years since that. It just brings the trade conflict to another, more serious level.
And when you look at sort of the escalating tensions with us and China, can you just take us back to how we got here?
Well, you know, if you go back, we had tariffs on $250 billion worth of goods that came into China. There's a 25% tariff there. Now, China then retaliated. They put tariffs on U.S. goods into China. Now we have this new round that could be coming out September 1st. The $300 billion of goods that are not currently under a tariff would be tariffed by 10%. China then comes out and says, hey, we don't have that many more goods to actually put tariffs on that come in from the U.S. We are going to weaken our currency. Why? They want to make Chinese products more affordable in the global economy. U.S. says that's unfair. A lot of people I talk to think that these new tariffs are going to 25% in a hurry. We are looking at a lot of pressure on U.S. consumers if that happens.
Jill, any sign an end to this trade war?
Nothing on tap.
All right, Jill Schlesinger, thank you very much.